Thank you for having us. We've looked forward to coming and giving you an update on the recent year that we have been in operations. It's more or less exactly a year ago that we went public, and it's been a busy one. We've been executing well on our strategy, and hopefully I can tell you a bit more about it as we progress here. We are called Movinn. We are a Danish company originally. We also have operations in Sweden. I'll get back to that. But what is it that we do, basically? And what we do is that we are trying to figure out how the future of living is kind of evolving, how the future of travel patterns is evolving, and how people are going to use and live in cities in the future. We are merging technology with real estate and service to offer this product that we call service living, which is a flexible way of staying in the big cities around the world. We have 3 products in place. Our core product is symbolized with the black logo you see on the screen. It's service apartments. It is a product that is very well suited for international mobility. So when big companies, they have a need to attract international talents, it can be tech companies, shipping, medical, whatever, all sectors are represented more or less. They will need a partner to help onboard their international talent in a flexible and reliable manner, ongoingly and throughout the year. Then we have a newer member of our little product portfolio. It's called co-living. It's a massive mega trend happening across Europe. It's basically all capitals or larger cities in Europe. They have a housing shortage in housing supply. And co-living is a way to make housing a bit more accessible by the fact that you take very large apartments that the younger crowd has no need for, and you kind of carve it up and you bring people together. So you offer a serviced and flexible community where people can live and work and get new friendships when they arrive in a new city. So it's a super nice and super good story to tell, that you kind of help with battling loneliness and making apartments more accessible while still doing it in a profitable manner, of course. And the latest little product we have is our furniture rental service. It's called Collective Yo-Yo. This is also a way to service our existing clientele. Instead of shipping furniture around the world and instead of going out and buying fast, cheap furniture, then why not rent it if you're only in, say, Malmö or Stockholm or Copenhagen for 6 to 12 months? So it's a way to get consumers to consume in a different way, and also to limit a carbon footprint by shipping furniture all around the world. And it is a very cool product as well, and fairly profitable. So yeah, this is the 3 kind of sub products we have. The first one being the core. Our story is shown on this page. We founded the company in 2014 in Copenhagen, and then we spent the next couple of years branching out into other cities in Denmark, so that we covered the 3 largest ones, Aarhus and Odense, and Copenhagen, of course. In November last year, we went public in the Danish stock exchange Nasdaq, and with a plan to kind of export Movinn and the concept to other markets in Europe. Sweden was a very natural and important first step for us, so we were happy that we could kind of seal that one in the summer of this year. So we are operating in 2 markets in Sweden and planning to do a bit more. Our executive management is currently 4 people. It's myself, I'm the CEO. I've been with Movinn since we launched the company. I was a project manager back then, now I'm the CEO. We also have my partner Jesper Tanning. He's the original founder of Movinn. He's been working with facility service companies all his life. He built a very large facility service company that he sold to a private equity fund. And my skills, I came from real estate and service departments out of the UK and Denmark, and Jesper's skills with facility management was a pretty good match back then when we launched. He's still on board as the CFO, and is working day to day alongside me in the Danish headquarters. In Sweden, we have hired a very good, if I have to say so myself, director called Johanna. Johanna comes from the relocation industry. Relocating the international workforce is a massive industry, and relocators has always been an important partner to Movinn. So having a resource like Johanna on board really makes a difference in how we target the Swedish market. Johanna is situated in Stockholm and has a great network among the clients all over Sweden. And the last one is Marianne. She is our COO, newest member of the executive management team. She's been working as a COO for a very big facility service company called Alliance Plus. She's had the oversight of 1,000 employees, 350 million in revenue. So she knows her. She's very strong on the operations and the day-to-day bits and bobs and small steps that will make the difference in the long run. It's the small steps that matters. Our current group structure is shown here. We have the parent company in Denmark. We bought a subsidiary last year in Denmark as well. And then we have our two international subsidiaries, the Swedish one, where the commercial launch has been implemented, and we are in operations and servicing clients and all that. And then we have a German subsidiary as well, because Germany is obviously a super important market. It's the engine of Europe, 80 million people country, 10 mega cities. So we've done a lot of homework and groundwork in Germany to be ready for a launch. And the commercial launch is expected to materialize next year. So we're working on that. It's very exciting. I've also brought some numbers to look at. This is some recent financial highlights that we disclosed in our quarterly report that was published a couple of weeks ago or a month ago. We are growing pretty fast, I would say. We realized a 29% top line growth from the comparable period last year, and the comparable period last year was also a high growth period. So that is obviously something we're happy with. We have added in the first 9 months of the year, we've added 15 new apartments to the portfolio, which is a pretty big leap forward. We've launched 2 new international markets. We have realized with this pretty steep growth, we're still balancing our fundamental metrics and our bottom line metrics. So with a 29% top line growth, we're still able to deliver a 14.8% EBITDA margin, which we are happy with. We're also realizing a return on invested capital on 16% in Q3, which is also pretty good. There is a ongoing trade-off between growth and bottom line profitability. That's an undisputed fact. It cannot be avoided. So the fact that we are able to kind of balance the two this well is something we're happy with. Obviously, as time goes by, we expect to be more profitable, and that's what we're working on a daily basis. So yeah, this is another slide kind of documenting the profitable growth. We had this as a kind of soft promise when we went public, that we would continue to grow steeply, but we would at the same time have black numbers on the bottom line, and that's what we're doing on the 9-month accumulated numbers. We're doing it in Q3. We're also doing it on group level. And the reason why we're segmenting the group from the Danish operations is that we can report how the Danish machine is working, and we can also kind of transparently show that there's obviously a tear on the bottom line from launching new markets. It symbolizes investments. There's delays in kind of when you have penetrated the market correctly, you will have more cost than you will have revenue. It's again a pretty natural pattern in our industry. Looking at the balance sheet, we have some fairly solid financial position. we have an equity share of approximately 50%. With the cash that we generate from the operations, we are servicing debt and we are growing and we are doing a lot of good things. So we are in a fairly good spot, both if you look at quick ratios, but also if you look at our equity stake. And the fact that we are not burning cash from operations is also a massive plus for us. It's an important milestone because we have the Danish foundation profitable, generating profits, bottom line profits, and we obviously use that cash to consolidate our position and giving us a better launch pad for doing international launches as well. If you look at the cash statement in the bottom table, we've had a fairly crazy quarter, a crazy half year. That we've invested a lot in new units. The 115 point that we were at in the end of Q3 is approximately like 50% more than we we set out to do. So we are way ahead of that curve. And if you look at it on a year-end level, we still have a decent pipeline. So that will generate a pretty heavy growth in apartment numbers, as you can see on this slide. In the bottom table, you can see the development on how many units that we've added to the portfolio from when we started out. Obviously, apartments is where there is the revenue potential. So they are an extremely important value driver in our, if you want to project on our top line performance, or if you want to assess how we will do in the future, then looking at the apartment number is a vital value driver. And you can see that it has been moving along in some different steps. You can almost compare it to a kid growing up. There was the baby period in the beginning where everything was extremely slow, and then infancy where it was a bit better. And now I would say we're in adolescence, growing a bit steeper than we're used to, and executing on sourcing the units and getting them into operations, having them generate returns. We're obviously going to continue on this path, and as we grow in international markets, we'll create these parallel growth tracks that will also be fairly interesting for the future. A massive part of doing this in a clever way has to do with tech development. It's tricky to kind of go out and launch this sort of business if you don't have a very strong technological infrastructure in place. And when we started Movinn in 2014, we tried to source third-party software that wasn't really up to scrap back then. So we decided to hire a team and develop it in-house. So that's been a part of our DNA since the beginning, a very strong focus on tech. In recent years, a new term has evolved called PropTech. It's trying to coin these kind of mega trends happening within real estate, and I would say that we are pretty decent in that industry as a player. We have several products in place. We have all our platforms. We have our back-end systems, which is extremely clever as well. And then we have developed an access system, which is also a good piece of kit if you want to do this scale up in a scalable manner and in a scenario where you don't have to keep hiring 1 million people every time you grow. The access system allows people to. It's an IoT product, so it communicates with the Wi-Fi, and I can control all the access point from my phone if I want. It allows people to come and go without having any human interference. So it limits mistakes and it limits a lot of manpower and billable manpower hours. Another thing that we have executed on, we did this before we went public. It was a strategy point back in 2020. Which was basically that we designed and developed our own furniture line. Furniture is a massive investment item on our balance sheet because all apartments are fully kitted out. They are plug and play. You only arrive with your suitcase. So any apartment needs to look like a home and feel like a home when people arrive. So furniture is a massive investment item. In the early days, we would buy extremely expensive furniture from third-party providers, household names, well-known brands. We still do that to a T, but a majority of the FF&E concept, or the interior concept, has been developed in-house and designed in-house. And we have it produced in factories and brought up in containers, and it allows us to be extremely efficient when we put new units into operations, and it also obviously takes our cap need down, because instead of going out and buying furniture directly from a retailer, at a discount of course, but still, then we can go directly from the factories. So in my assessment, we've taken our cap need down by 30% or more, and it will continue to improve in the future as our bulks and volumes increase. We are present in 5 markets currently, 2 in Sweden and 3 in Denmark. We always report everything fairly transparently, so everyone can keep track on how many units we have where, and how much that's in the pipeline, and how much that's coming. We're also reporting if we have to give units back, because sometimes we have to do that as well, but it's not the case in the near future. So it's a way to kind of help project growth. And as you can see, we're present here in Malmö, and we're present in Lund, and then we have the 3 major cities in Denmark covered as well. And this gives us not like a unique edge, but it gives us some strengths, because a lot of the clients are these super big corporations that has a need cross city, and to that extent that we can be more of a one-stop shop provider, that will give us a bit of it's a nice kind of value proposition when we go out and pitch to new large companies to use us. And again, looking at the pipeline for Q4 compared to the realized growth we've done up to Q3, we will be putting 140 into operations end of year, which is pretty massive. It's like twice the number that we set out to do. So that is very good. We're obviously not stopping there. We have new markets in focus. That is more or less all that I do these days, is kind of keep pushing the networks and keep pushing the relationships, trying to facilitate new launches and new markets. If you look at it from a risk perspective, it's a way of diversifying your activities. A good example was that when the COVID-19 crisis hit us, Denmark was very tightly locked down. It was impossible to kind of get in and get across the border, where a company like Sweden were way more liberal with COVID restrictions. And have we been in operations in Sweden and Denmark at that time, Sweden could carry some of the transient loss that we expected, that we realized in Denmark, where the borders were so kind of tightly shut. So it's a way to diversify your activities, and obviously it's also a way to create these parallel growth tracks that will become interesting in the future. We're looking at Göteborg and Stockholm as like usual suspect markets, so to say, or like super obvious markets, and then Hamburg as well in Germany. And that is where we have placed our our German office, and that is where we expect to do the first commercial launch. Hamburg is this mega city compared to our little Scandinavian cities. There's a lot of activity, trade, commerce. It has a major port. It's an obvious market for us, and we have great hopes for that. We expect it to materialize next year or in 2024 at the latest, but we're working tirelessly on kind of getting there. Our roadmap to 2025, this is a complete copy-paste from all the other reports we ever did since we went on the exchange. It was also in the prospectus. It's been a bit more detailed. But basically, this is the long-term promise that we make. We don't do any earnings guidance 5 years into the future. We provide value driver guidance, and if you want to be a geek and sit and recreate a model, you can easily do that with these 6 value driver informations that we deliver. It's obviously portfolio growth measured in number of apartments. It's that every apartment has to perform within a certain range, looking at the revenue. It is keeping our vacancy at a level where we can be more profitable than if vacancies are too high. It is launching 1 to 2 new markets every year, so we keep kind of pushing the boundaries of our reach and our growth. It is realizing EBITDA margins of 15% while we do this. So this is not, we don't expect to be on 15 in 2025. We want to be there now. So that is kind of why we try to balance top and bottom as much as we do. And the last one is return on invested cap. It's set at 18% or more. It's a pretty decent return if you look at kind of cross industries. It's fairly high, and we want to keep pushing to that goal as well while we grow. So we're doing a lot in one go, but as you can see, we are kind of getting there. You know, we are performing with the top line. We're performing on the portfolio growth. We're performing on the revenue. On the vacancy. We are launching the new markets as we promised and as we kind of planned and set out to do. And I put EBITDA in yellow because it's on 14.8, so it's just shy of the 15. But we're also trying to push the boundary of being more profitable as we do this. The same with return. It's on 16%, I think, in Q3, which is a bit below the 18-point mark. So that's why it's in yellow as well. So yeah, we why invest in Movinn? You know, we have taken our growth up by 140 units compared to a promise that was significantly lower. We are growing the top line 29% period on period. We have our ICs of 16%. We have our EBITDA margins of 15%. We're launching new markets according to plan. And then one should say, okay, that your share price must have been moving in the right direction. But as you can see from the slide, obviously that's not the case. So that's also a focus point for us as well, of course, getting the message out there, doing the investor relations, trying to get people to understand that our current market cap of 66 million is what it is. But if you want to triangulate it by looking at multiples, it corresponds to an 11 times EBITDA of the realized EBITDA of last year, and it corresponds to a 6.6 if we set out to do what we expect this year. So I'll let the market decide on whether that is correct or not. Yeah, thank you for your time. That was my presentation. I think we kind of made the time slot fairly all right.
Yeah. Thank you very much for that presentation, Patrick.
Welcome.
First of all, congratulations on your first international launch. That must have been a pretty big step for the company.
It was.
Yeah, I'm just wondering, how was the first initial response been in Sweden? How would you compare it to the Danish market?
On the client side?
Yeah.
Or on the client, yeah. It's been good. It's been good. Obviously, coming into a new market, you're going into an existing kind of structure of competition, and the clients are used to working in a certain way, but we've been received well, and we have the ability to kind of grab some of the Danish clients with us that has this kind of cross-regional presence. So some of our bigger clients in Denmark are using us in Sweden as well, which gave us a head start on that. And then I would say our VD that we hired is extremely strong in the domestic market. She came on in October, so she's only been around for 2 months. Yeah. And I was trying to kind of sit on English / Google Translate and writing everybody and trying to get them to like me and being part of the Swedish tribe and all that. But that's always way better when you have a local in place. So it's moving in the right direction, and people are positive for sure.
Yeah. Would you say that most of the clients in Sweden are new ones, or are most already existing clients?
It's if you look at it locally, it's new clients, but the network of partners are the same. In our industry, there's a lot of infrastructure in place, great, massive international relocation companies, for an example, and we know them already, so that's a good start. It gives us the opportunity to piggyback on that and kind of move it along. But other than that, it's obviously some of the clients have operations in Denmark. Some of them are for sure totally local.
Yeah. Okay, I'm going to move on a bit to what you said in the Q3 report. You talked about a bit of a shift in strategy, where you, for the first half year of 2023, you're going to focus a bit more on the existing units instead of growth. And I was wondering, what's the main reasoning behind this, and what do you think the outcome will be?
Great question. We're basically not kind of slowing down, but because we're so far ahead of our growth curve in measured in units, we want to do an exercise where we really super optimize on what we have. instead of just keep pushing and keep stretching the organization and keep stretching the bottom line margin. So we want to spend probably not all of the first 6 months of next year, but we want to spend a good part of it on really hammering away some improved metrics, bottom line metrics. We want to show the market that we can generate free cash flows.
Yeah.
That's because that is a no-brainer for me. I get asked this question a lot of how much you invest, how much is like maintaining the existing operations, and how much is growth. And I would say a ballpark figure is 10% maintenance and 90% growth. So if I'm right about that, then then doing a slowdown measured in units. It won't be a slowdown measured in top line because we have all the units, so we'll still be able to display growth anyway. And then hopefully we can also display some pretty attractive free cash flows to the market.
Yeah, I'm looking forward to seeing that, Patrick. I think we're running out of time, so thank you very much for coming.
You're welcome.